All right, everybody, here we are back down live on the floor. And yes, it is busy. It is rocking. It is rolling. This is the S&P 500 pit here at the CBOE right on the floor. Good afternoon, everybody. Can you hear me and can you see me? Because it is really, really loud behind me. So if you hear some background noise, folks, we're not pumping that noise in. That is the noise of trade going on. Before we get into anything, okay, just to my left is the VIX pit, the volatility index pit. And there's a trade that just went down about 10 minutes ago, something that I really have never seen in my career and talking to the brokers out there, something that they have never seen. Okay, I want to show that to you right now. Whoops, hang on. There we go. Okay, so this is loading up right here. Come on. Don't. Oh, that's because I've got the wrong. Hang on. Come on. Let's get Vix up here. Hi, Matthew. How are you? Sorry about the false warning on Wednesday. I just wasn't feeling good. Didn't want to get down here. So, all good. Thank you. Okay, guys. What do you see on the screen here? Okay. What does that look like to everybody? Something that we've seen all the time, right? It's not an unusual type of strategy. Okay. What do you see there? What is that, everybody? What kind of strategy? What kind of position is that? I'm sure none of you thought that I was going to come out and right at the start here start asking questions and looking for answers. Thank you, Bear. Bear, aren't you supposed to be skiing? You just got off the lake. You said you were going to go snow ski right now, and I was very, very jealous. Yes, it's a butterfly. Simple enough strategy, right? Look at the strikes. Focus in on these strikes. And this didn't trade one time. It didn't trade 10 times. It didn't trade 100 times. It traded 50,000 times. Now, 50,000 for a trade in the VIX is, that's a good size. It's not really anything out of the ordinary per se. I mean, that's a good sized order, but it is the width, exactly what you just said, Gus. It is the width of the strikes here. Okay. Now, what do you think someone paid for this? I mean, you can see the prices on the screen here. What do you think someone paid for this? And what are they looking for with this position? And what we don't know is this some big bank? Is it a hedge fund? Is it an institutional player that maybe put this on as a hedge against some other maybe puts they've sold in the market, other premium that they've sold? So this takes off some of that risk. But what are they looking for with this position here? And I'm not bringing this up to anybody to say, okay, go run out and start, buying these strikes or anything like that. I'm just putting this out there because this literally is a trade that nobody has seen like this. That nobody has seen like this. They're looking for the VIX to go to 100, right? I mean, short strike, right? Short strike's 100. This is June. We're only 2 months out, a little over 2 months out on this. Now, they definitely profit from volatility. They paid $1.50. Okay. So $150, 50,000 times notional value, $7.5 million investment. Now, for me, for you, for any of us here, boy, that's a ton, right? If it is a bank, if it's an institution, big hedge fund, whatever it might be, this could actually just be a really cheap hedge for them if they had already sold a lot of expensive downside premium, downside puts, or something else in the marketplace. So we don't know that. We do know this is an opening position, but we don't know the thought process behind it. Nonetheless, a 50 point one buyer, One buyer, Paul, one buyer went down 50,000 by 100,000 by 50,000. Okay. We don't know what the rationale was behind it, but to see the VIX put up a butterfly with 50-point increments, okay, where we're usually, obviously not right now, we're usually seeing, used to seeing a VIX trade in, 1 point increments a day, something like that. This is nuts. This is absolutely nuts. So certainly be something to watch over time here. Whether they're looking for something immediate, something maybe after earnings season, there's a Fed meeting, who knows? Who knows? And again, we have to think of this. We have to think of this. When you see unusual option activity, and I know that, it's a buzzword, right? And people sell their programs on it, and people are touting that all the time. Sure, this is unusual, but we don't know why, when, well, we do know when, why, or how, right? So when I see something like this, I'm not, doesn't make me want to jump into this. It's just something really to watch, something on the radar. Any questions about that? I know I went off tangent. This is not what I wanted to cover today. I asked a bunch of you in the room this morning what you wanted to talk about, and we're going to talk about it. Yes, max risk on that, Jeremy, is the $1.50 they paid. So VIX goes out under 50 or over 150. That's what they lose. Their break evens at expiration literally would be 51.50 to 148.50 if they held this to expiration. If they held this to expiration. Okay. So how does commission work on that bill? Yeah, I don't know. My guess is there was a deal. The broker made some deal. You're talking about a total of 200,000 contracts on this. So probably just said, okay, here's how we're going to do it. Okay. So we'll come back to that. Just wanted to point that out. The hot topic of the market right now, obviously, besides tariff, which we could talk about ad nauseum, which I'm not going to talk about, is what the heck is going on? Who has felt like this? I know I have. I have. Yesterday, I actually had to leave for about an hour to go to physical therapy for something in my back. And a lot of you in the room said, are you going because you've got whiplash, right? Yes, the traders are allowed. It is very, very busy here, Paul. How many of you feel like this with what's been going on this week and over the last several weeks, right? Because as we've talked about, we have none of us, I don't care about the oldest trader here, someone that's been here longer than I have, and that's 35 years. Nobody has ever traded through an environment like this where one tweet can change the landscape of the market, where it really takes out some of the fundamental underpinnings of how the market is supposed to trade. So that's why I feel like this. I don't know if any of you do. So what is going on in the bond market? Right? We trade equities, we trade stocks, bonds, the fixed income, the debt market is twice the size of the equity market. So when we see moves in fixed income, in treasuries, like we're seeing right now, that are pretty much unprecedented moves, it is something to light up everybody's screen. Okay. What is happening? Can you guys give me kind of the breakdown of why you think this is happening? And I'll explain it. I'll explain it. What is happening in the bond market? Well, you can see it right here. This is the US 10-year yield. Now, we've talked about this before. I think most of you probably know that bond prices, treasury prices, and interest rates are inverse. Bond prices go up, interest rates are coming down. Bond prices go down, interest rates are going up. Okay. Just last week, and this was the intended consequence of a lot of this tariff talk. I'm not going to get into anything on the political side of this. One of the intended consequences of this whole situation was to drive down interest rates. Okay, so that we could potentially refinance, the US could refinance their debt at a cheaper rate. Well, worked for a couple days here. But then when the you know what hit the fan and the excess started coming out of 5,000% tariff here and 73,000% tariff here and no rhyme or reason to what was going on, what happened? The absolute opposite of what the administration wants to happen. They wanted rates here and to keep going lower. And we have seen a historic rise in less than a week. The 10-year a week ago was trading about 3.8%, topped out this morning close to 4.6. I want to say it's 4.5. Looking up on the screen here. I'll let you know exactly where it is right now. I think it's at 4.54 right now. Okay, so why would people, investors, sovereign nations, whomever it is, why would they sell U.S. Treasuries? Doreen, why would they sell it? You said it right there, Guillermo. You got it. Less confidence in the U.S. economy, or maybe it's a way to combat the silliness, the craziness of what is going on with this tariff situation. Nonetheless, this is hurting you. It's hurting me. It's hurting every single citizen of the United States when something like this happens and the world is losing confidence in the U.S. economy. And we haven't even talked about the dollar yet. We'll have a whole other conversation about the dollar. The dollar has had its biggest loss yesterday in a one-day loss in over 20 years. Okay. So the intended consequences of what is the hope of this insane policy, the absolute opposite is happening. So let's talk about this. Okay. And this, Guillermo, this goes pretty much right to what you are saying right now. Okay. The US Treasury market, it is the rock solid, pillar of global financial system. Okay. The US dollar, the US Treasuries, worldwide, globally, the go-to. Everybody in the world can count on it. Okay. But it's now coming under heavy selling pressure, which is causing those rates to move higher. Okay. You can say this is what I just talked about with where 10-year yield was last week, where it is right now. I mean, what an insane, incredible difference from last week. And the complete opposite of what, okay, I'm looking at the 10-year right here. And this is probably why the market rallied over the last 45 minutes or so. 10-year is now, I'm going to say, down to 447. Traded up over 460 earlier this morning. Okay. Now, why do we care? What is so fanatical about the 10-year? Right? Well, first off, our treasury market is crucial to financial stability around the world. Unquestionably. Okay. The government borrows, the government sells our bonds, right, to raise money. Okay. Well, if other people are selling our bonds cheaper and cheaper and cheaper, why are they doing that? Think of supply and demand. If I've got something to sell and I've got a lot of it to sell and there aren't any buyers, right? Well, that's going to drive the price down. Well, in the bond market, as we know, and we talked about that inverse relationship, if the price of bonds are going down, that means I've got to entice someone else to buy those bonds by offering them a higher interest rate. So, with rates going higher because of this bond sell-off, causes everything to be more expensive. Not only is it going to cause the US to get further in debt because refinancing costs are going to be through the roof. And listen, this whole landscape may change by tomorrow, right? A tweet can change this whole landscape. We're just talking about what is happening right this second. Okay. But the 10-year is tied like this, tied to the hip to everything that we use on a daily basis. are mortgages, corporate loans. You want to go get a loan for your car. Everything is based off of the 10-year. Okay. And these higher treasury yields, they're not only pushing up borrowing costs here, they are pushing up borrowing costs across the globe. And you know what? We're lucky to be here. We're lucky to be here. As much as we can say our economy is not great, and it certainly was, or maybe it's teetering or faltering, we're still the strongest, best economy in the world. You go to other countries, go to Great Britain, France, Japan, the debt that they have is worse than ours. It's worse than ours. So it's going to cost them even more. So it's like this darn vicious circle. Okay, now who's behind all this selling? Who is behind all this selling? Is it China? A lot of people think it is. We don't know for sure. We won't know probably for a few months. But a lot of people are believing that it's China and Japan, mostly China, selling our treasuries, which they own a ton of. In fact, as of just last week or so, they owned almost $800 billion. $800 billion worth of our treasuries. Are they selling it? Are they the ones just dumping because they want to upset the apple cart because of the tariff war that's going on? Absolutely could. Absolutely could be them. These are quotes that I literally just pulled 5 minutes from before we went live here. Okay. Industry groups are panicked. Okay. I'm not going to read them all to you, but these are from major financial publications, really, really smart people, economists out there. Okay. And you can see the level of concern about what is going on in the bond market. Now, how many of you remember something called the Fed put? Okay, whoop. You know what? Let's do that, actually. Let's do that right now. We're going to go back to the Hulkster. We'll do a word of the day here. Easy word. I couldn't come up with anything, fancy, fun, whatever it is. Bonds is the word of the day here for the Hulkster. Okay, let's get that in there. Let's get back to doing this here. And while you're doing that, who remembers the adage, the phrase, the Fed put? Started with Greenspan and then Bernanke and now Powell. Okay, does anybody kind of remember that over the last 20 years or so? What the Fed put was an imaginary put. Okay, not a real call or a put. Okay, but what does a put do for you? If you have a put in your position, it's protection, right? It protects you from the downside, right? That's why people buy puts. So there was this thought process out there that if things got too bad, the Fed could always come out and lower rates, right? Which would kind of ease the pressure. Lower rates, typically good for the market, good for the economy. So there was a backstop. There was a backstop called the Fed put. Again, it wasn't a real put saying, okay, the Fed put's in play now. It was something that was imagined, okay, but it was out there. Right now, many people, many of the smartest minds in the world believe that there's a Trump put. And there's a Trump put because he does not want to see this market disintegrate. He does not want to see interest rates, the 10-year at 4.5%. He wants the complete opposite. We haven't seen them kind of use that yet. We did last Wednesday. Was it last Wednesday or was it this week? It's this week, this Wednesday. My God. I mean, these days are just running together, right? When he made that announcement in the morning, buy, right? And then news came out that they were, pulling back on the tariffs. That's kind of the same thing as the Fed put or the Trump put. Many people believe that's going to happen again, that he's going to give in. He's going to capitulate again because The administration cannot continue to see the markets like this. As much as they say they don't care about the markets, don't buy into that. They do. But even if he comes out with something, is that going to quote unquote save the market? Is that going to stop the bleeding when we know that, and this goes back to the beginning of this conversation, when we know that literally 12 hours later, a day later, a week later, another tweet, something on the opposite side can totally upend things again. Therein lies the rub. Therein lies the massive amount of uncertainty and volatility that we have in this marketplace. That's not going away anytime soon. I'm not suggesting we're going to see a VIX of 40, 50, 60, whatever it is, continuing. That's, historically, that just doesn't happen. It really can't happen. Okay. But this intraday volatility that we're seeing, where the market is literally hinged upon a tweet, that is not good for anybody. That is not good for anybody. Okay, so back to here. You guys all saw the bonds thing. If you're late, you can still put it up there. Let me just read these to everybody, just in no particular order. Concerns around foreign holdings were echoed by Deutsche Bank, who suggested that on April 9th, this was Wednesday, current U.S. administration policies are inadvertently encouraging the sell-off of U.S. treasuries, particularly noting the ongoing tariff escalation and financial tensions with major foreign investors like China and Japan. China and Japan are the two largest holders of our debt. Okay. A broader financial conflict with China is weaponizing its holdings of U.S. assets, a move which could cause both Chinese owners and U.S. issuers to suffer. And again, guys, these quotes, these are not political. These are not from just one source. This is financial. This is both sides. I don't care what side of the aisle you are on. This is both sides. So this is completely not just coming from Fox News. It's not coming from CNN. It's not coming from Newsmax. It's not coming from whatever source it is. This is collective, the best financial outlets that are out there. Okay. Rumors are swirling as to the gyrations from leverage statistical arbitrage unwinds and the basis and relative value trades to foreign governments, particularly China, selling off their treasury holdings. Nobody knows, but these last few days have been one hell of a ride with some people getting seriously hurt. Okay. Trust me on this one, guys. It is not political. Just go Google 10-year, Google bonds, and just see what comes up. And it's the same story you're going to get from any news outlet. Okay. The market is agnostic, totally agnostic to if someone's a Democrat or a Republican. All right. So there is major concern here. There is really major concern about the deterioration of the debt market, which is the bond market. Okay. It really hasn't filtered through yet to the economy. It hasn't. In fact, yesterday, if it weren't for all of the other headlines out there, the tariff headlines, the bond situation going on right now, we saw that CPI print yesterday morning, you would have seen everybody on Wall Street with pom poms on, cheerleading. The market probably would have rallied huge because that was a really encouraging number yesterday to see that CPI number, the inflation number, come down, whether it's temporary or not. A lot of people think that, the whole tariff situation, which has not hit the marketplace yet, is going to put pressure and raise inflation. But for right now, that number was a heck of a print. Okay, kudos. Heck of a print. But it got overshadowed by everything else going on. All right, let me put the Hulkster back here. I've been just talking and talking and talking and talking, and hopefully you've been able to hear me because it is so darn loud back here, which is really, really good. And you can pull up on whatever platform you're using. You can pull up that VIX trade that happened, and you can see it went down. What time is it right now? 12:24. It went down. I think I got the alert. From my broker buddy in the pit over there at 11:26. It's about a half an hour before we went on. Right. All right, everyone. We're going to close up the wheel here. It is busy. I know it's loud. My adrenaline is pumping so loud I'm going to crash at some point here. But hopefully you can kind of feel and get the sense. I'm going to move out of the way here, although there's a little bit of a lull right now. Get the sense for how things get heightened, right? When there is trade and how intense it can be, right? And the activity that happens here. It is really something if you have never experienced seeing it live. Oh, Gus, you have no idea. It is really something that if you've never seen it live in person, maybe you've seen it on Trading Places or whatever it is an experience. And again, as I always say, if you are ever in Chicago or want to join us for, one of our in-person events, or you're ever just passing by here, happy to take you down here. You can stand right where I'm standing. Come right down here and see what these people do. Live trading environment. That could be Quasar. So let's pull up our wheel. All righty here. Let's get this bad boy going here. End of the week, Friday. Today's winner. Is it Guillermo or is it going to be Gus? It is so close. Oh, yes. Do you think that was fixed because you just asked me about if Goose Hour is coming? Um, Elisa, that's kind of an inside joke, but my go-to beverage of choice after hours is Grey Goose. So that's why he said that. Definitely no cheating. I wouldn't even know how to program this thing to land on someone's name. That's way above my pay grade. All right, everybody. Appreciate all of you. Glad we could get back down live on the floor here and really bring something, so important, so pressing. Goose Island. Yeah, Goose Island's good too. Goose Island is good too. Glad I could bring something so pressing and hopefully just, lay out the landscape, let you guys understand some of the mechanics, some of the interconnectivity between markets here. Thank you, Robert DB. Yes, hit and smash that like button. I hope everybody has a fantastic weekend. I think we're all well deserved of having a nice, relaxing weekend. Maybe not like Mr. Bear, who is going to water ski and then snow ski in the same day. No, I am not jealous at all. Can you tell? But whatever it is you do, have a great one, everybody. We'll see you later.